Okay, so trying to bit of summing up today, and also just talking about some of the themes. And I think a lot's been talked about digital out of home. We all know how well digital out of home is doing as a sector, and a bit about automation. Not a lot, but I'm gonna kind of talk about kind of these two areas. And really, I mean, there were some numbers banded around about how great growth is in out-of-home. I disagree with those. I've got the real numbers. I'm going to share those with you. And then I'm going to tell you what we've done. So to kick off, right. So I guess the question is, why do we think we deserve growth as an industry? And it's because we've been plowing money into the sector. You know, so when I started in '91, we used to spend a few $100,000 on rebuilding some 48 sheets. We might rebuild the old 6 sheet. And it wasn't really a capital-intensive business. You know, the game has changed. It's literally hundreds of thousands of pounds. And over the last 5 years, according to Talon, 400 million has gone into the sector. You know, so we're putting kit in, and therefore we need growth. That's my dog. I only put it in there because it's better than Justin's. You know, as is this. That's called, is that called linear or dynamic? I'm not so sure. But the key thing with this slide is actually, it's going to continue. We're all investing more. We can't stop. It's kind of like we're on heroin. I'm not going to talk much about Link, except, I mean, a lot of you have talked about it. It's coming kind of July time is when it'll be first available for sale. We're launching in Camden and Southwark. It's nothing like New York. So New York's got 6,000 links. You know, we're looking to have 1,000 across the UK. And it's really about kind of city centers. So keeping it really tight. The key thing about the product is it's about providing a utility back. So it's got a couple of good screens on, 55-inch screens. They're raised above the ground, so you don't have bins in the way. But the key thing is the Wi-Fi. You know, so this is the fastest Wi-Fi you will experience in the UK. To give you an idea, we were in New York a couple of weeks ago. It's going to be the same sort of Wi-Fi, and people were downloading HD films in about 30 seconds. It's faster than you can do at home or at work. And as someone said, you can kind of use them kind of from 100 meters away. You know, so you might not be connected all the time, but you'll be connected most of the time. Some other cool things about it, there's no log on, so we get your email address once, and then whenever you're close to a link, you automatically connect. So there's none of that horrible, please re-enter your details or any of that sort of stuff. And it's all free, and it also has, we don't call them payphones because you actually don't pay for any of your calls. So everything's free. You call landlines, you call mobiles, everything's free. And it's quite interesting because one of the things that people thought about in New York was, why is anyone going to use payphones? You know, why are they doing this? But actually, once you introduce them, people know it's free. People love free stuff. And actually, the usage numbers are pretty high. So that's kind of all I'm going to say about Link, unless anybody has any questions. No? Okay, so on we go. So some of you would have seen this data that came out about 4 weeks ago. Tim circulated it. It's from WARC. It's how the industry is doing. And I wanted to just look at a few of the areas. So that's TV, you know, bouncing along, doing quite well, being supported by VOD, you know, so that's kind of helping TV. That's, of course, national press. You know, and as you can see, national press went from 30% of spend down to 10. That's search, mainly Google and Facebook, as you all know. And they've gone from kind of nothing, almost as big as TV. Some people say they're bigger than TV. And then that's out of home. You know, so where I sit, 400 million pounds spent, we're kind of flatlining. You know, so it's just not good enough. And that's everyone else, you know. So last 5 years, this is the data. This is the real data. Okay, last year we did slightly better than market, but over the last 5 years, we've done not so well. So our growth rate, 3.3% versus market 5.6%. And some of you will be going, oh, that's 2%. Well, what's the big deal? It's 132 million pounds of spend that we've lost in terms of share as an industry, right? What's worse, TV, radio, cinema have all performed better than us over the last 5 years. This big, juicy opportunity called national and regional press, and that's display, that's not even classified. 850 million pounds has come out of national press. You know, I think apart from a few stunts, you know, like the Specsavers stuff, we haven't got anything. You know, all that stuff, that retail stuff we used to see in the papers every day, it's all gone to search. And okay, guess what? For this year, they're saying we're going to do 1% better, but then next year we're going to do 1% worse. So I'm kind of disappointed. And kind of what we decided to do as part of this session was we appointed Mediatel, and we got them to contact 30 individuals. So there's 10 clients, some big clients, mainly all big clients, 10 agencies and 10 specialists, and just asked their opinion on some things. I'm going to go through the themes. It's all done in the last 3 weeks, so it's all recent. And then, you know, just try and come up with some stuff. What's the other stuff we should be doing as an industry? So these are the kind of broad areas I looked at. So digital out of home, is it growing the medium or is it cannibalizing the medium? Trust, you know, so we all know about the issues online are facing at the moment with robots and YouTube. Is this an opportunity for us? Can we get some of that share? You know, looking at digital out of home, you know, it's growing, it's, you know, fastest growing medium, expected to even continue to do that. What are the things that are really working that we should be doing more of? We'll talk about automation, and then really just what the respondents said. You know, what did they think were the things we needed to do? So that's our market. Most of you remember the bad days of 2009 when the restaurants in Charlotte Street started to shut because nobody could afford to go in there. But you know, since then, things have been good, and we've kind of been on an upward trajectory. But actually, all that growth is digital. You know, so if you look at the brown line, that's classic out of home, and that's kind of been coming down. So over the last 5 years, we've lost 100 million of revenue out of classic out of home. And, you know, some of you will be going, of course we have. We've converted all the best sites, you know, so, you know, surely that would have had an effect because those are all digital. And that's kind of partially true. So if you look at the numbers, and this is just from 2004 to 2017, you'll see 6 sheets are down 23%. Billboards, I've combined them together, down 40%, you know. And actually with 6 sheets you go, well, 1476 sheets, that's about 12,000 faces. So actually we've only lost kind of half the amount, and they're higher value. But I think the whole, you know, the large format drop in inventory, you know, that's just been caused by pressures on operators where prices are being forced down on classic out of home, and we just can't afford to keep them running. And guess what? The market's forecasting it's going to continue to get worse on classic. Now, Kinetic issued a report, I think 3 weeks ago. They talked about how busy the billboard market is. So billboards have occupancy levels of over 90%, 13-week lead time, huge demand, yet the AA is forecasting that these the revenues are going to go down. I disagree. You know, I think classic is going to look to bottom and might actually come back up, but I think digital will continue. So, you know, we asked the panel the question, so do you think digital out of home is cannibalizing traditional or increasing? And actually, kind of mixed results. So nearly a third of the sample going, it's just taking the classic revenue and, you know, making it digital. But actually quite a few thinking, yeah, it's increasing revenue. And so what I wanted to do was I thought, let's look at some different countries, you know, so what's going on. So I picked two, you know, USA and Australia, because probably as similar as you can get to us. And actually the statistics were quite interesting. You know, so in the US, the growth over the last 5 years has been 3.7%. Actually, they've done just as much digital as us. There are loads of investment. But Australia was amazing, 10.2%. You know, so I thought that was pretty cool. So we looked at it in a bit more detail. So 10.2% CAGR means revenue is going to double every 7 years. Yeah, so that's where we want to be. And when we looked at the detail in Australia, you can see the brown bars, that's all classic, and that's pretty much stayed flat, dropped a bit, and you can see the blue digital actually being more additive. You know, so I've gone, well, this is pretty cool. So I called Rob Atkinson, who some of you will remember. Rob used to run Clear Channel here, used to run Clear Channel in Australia, recently left. And what he said to me is that they'd done two things. Well, firstly, he said Australia is a smaller market, you know, so it's easier to grow. But the other thing he said to me is they kind of marketed them as two separate mediums, so kind of kept them separate to stop the cannibalization. But the other thing they did is they created kind of platforms which allowed them to plug into digital agencies. You know, so they started getting a lot of money from different sources by just kind of widening the purchase funnel, really. And that's what he thought was the key thing. So, so when a digital agency is looking to buy mobile or VOD, digital out-of-home sits along kind of on the same screens, really. So I thought that was really interesting. So this was something that Ocean kind of shared with us. Again, just the whole sentiment, digital out-of-home is going to be, it's got the biggest growth potential. Everyone can see that. And we wanted to kind of go, you know, look at the trust area. And I don't know if a lot of you saw this, but this is an article that ran in The Economist, October, and it's kind of right after Ad Week, and kind of shockwaves in the industry. And basically two things had happened. Dentsu, their Japanese ad division, had basically admitted that they were overbilling clients. You also had Facebook, you know, basically telling everyone that the views were significantly greater than they were. And clients kind of going, you know, they knew there were, you know, stuff was being marked up. They knew their online advertising was kind of being shown to robots or being hidden. We then had the whole YouTube fiasco. But fundamentally, what The Economist said is Facebook and Google are too big. And again, I don't know if you saw the Sunday Times last weekend, Enders Research, 89% of all revenue growth in the UK is going to Facebook and Google. And clients don't want to take them on. So I think for us, let's not try and take these guys on. And I think what we also found is we've got problems of our own. You know, so when we asked about delivery, trust in out-of-home, we do better than online, but actually we fall below, you know, the other four medium. Mainly around digital verification. That was a theme that came back. You know, so people like spending the money, but a lot of media owners still can't get playout reports, and that's frustrating. Currency, you know, spent so many years around that root board table, spending millions, but, you know, we fall below cinema in terms of currency. I mean, that's bizarre. But I think, again, it's something that we haven't done and we haven't marketed. So I think from my point of view, just on this whole area of trust, you know, we should concentrate on our own business and selling our assets as opposed to worrying about what's going on in online. And this kind of came out in the answers, really. So we face our own issues around verification, you know, total lack of verification. I think that's slightly harsh. Very little actual verification. And then they talk about root data, you know, very robust. But again, it's kind of stuck with the specialists. The root data is not really shared amongst the agencies, which I think would open things up for us. So, you know, I think a lot of people kind of said, what are the key things that they love about digital? And you know, for me, flexibility and effectiveness are the two kind of core bits. And I think effectiveness, it was interesting what Tim was saying about research. We've got buckets of this stuff. I'm not sure we're sharing it, but what we've done is every time we run a campaign that has classic and digital, we monitor kind of the effect of the digital posters by polling people close to the digital sites. And then we poll people who don't have any digital sites. And you can see the numbers, the spike, you know, plus 17 on awareness, 22% consideration, emotion, action. So it's working, and it's kind of, echoed by the respondents. You know, everyone we spoke to, clients and agencies, generally liked it. They liked the whole thing around day parting, agility. For smaller brands, actually, it's a lower cost per entry, which is attractive. The whole premium-led feel, you know, when you look at the digital screens, you know, they look, wow, you're going, I want my brand on that. The whole, you know, again, day parting. But I really like this one. And I think, you know, when I was writing this presentation, I did feel I was bashing myself up a bit. And actually, in terms of broadcast digital out of home, I think we've only really been in the game for maybe 2, max 3 years. We had a lot of great premium digital out of home, but I think the broadcast stuff's only just coming. And, you know, maybe that's what's going to give us the growth as more and more screens come in. Flexibility, you know, everyone thinks it's good, but still there's 30% of people going, no, I'm not sure flexibility is bringing in new money. Now, you know, we all saw the Specsavers ad, and, you know, that's great, but it's a stunt. You know, and I think for me, this is our problem. You know, this is news brands versus us, and we're just not playing in this game. You know, we're just not getting the money. A lot of press money is bought in the week for the week. You know, and I know Justin said you had one example of somebody called yesterday and booked today. Those are few and far between. People in agencies just don't think of us as a immediate media. It's too difficult. I think that's definitely something that we have to change. You know, so what could we be as an industry? What could digital out of home be? And it pretty much was, you know, sky's the limit. You know, people go, you know, there was one comment about people over-investing in online. You know, 20% should not be unreasonable. And then this whole issue around share of time. And, you know, maybe that's the metric. And TV, which is about 30%. I think average TV viewing is about 3 hours 50. And I think from Outsmart, they said, on average, we're out 3 hours 10 or something. You know, so we'd settle for half, you know. Give us 15% share. But that's what we should be, going to. And confidence in digital out of home. Again, really top scores, you know. Providing we can demonstrate effectiveness, which I believe we can. We got loads of case studies. But there was this whole area, and, you know, it was interesting listening to Dino. And we had dinner last week with about 8 creatives. And they all said, we need education. We need you to come into the creative agencies, talk to us about how to best use the medium. Show us stuff that works and doesn't work. So the whole idea of using creative better. There are some people who think it's overpriced, very expensive. But I think that's because they compare it to classic out of home. You know, so, and what they're doing is they're going, oh, average 48 sheets. It's 250 quid. You know, but you're getting the chance to put your message where you want at the right time. And that's value. You know, and I think we need to focus on value and less on price. Data, now, you know, this is all around using data to kind of make digital campaigns work better. Long session about it this morning. So don't really have to talk much about this, except everyone thinks it's good. You know, more data will increase the investment. I think providing we have the systems and the tools to kind of manage it effectively. Increase in data usage, you know, increase investment. You know, this is what people said. You know, so we had something that's running currently live in Gatwick Airport. It's with Wagamamas, so whenever the restaurant begins to empty, the content automatically goes on the screen. You know, really simple, quite clever, but really effective. And that's the whole thing. I think there's a lot of chat about big data and mobile data, and actually a lot of it can be quite simple. I think we try and overcomplicate things. But generally, again, clients going, you know, if stock's low of a specific product, we can put something else on, tailoring the message. But I think it's early days. I think we're all early days. And again, I think here, somebody talking about big data and scale and the expense of it, which it is expensive. My conclusions, I think we're in a good place in terms of the industry. The digital out-of-home industry hasn't been going as long as we think it has, just because we're in it and we live and breathe it. But from the outside, I think we have scratched the surface. But we've got to continue selling, marketing. I think creative agencies are key. I think for me, this is a big thing. We're not benefiting from this, proper campaigns that have to come in the next 2 or 3 days. I just don't think people in agencies think of us that way. Data, important, needs investment. And then for me, the whole thing around, what the Australians have done with dashboards, I think that's definitely something that we've got to get to, really. And of course, verification. I think verification is a given, really. It's just a tick mark. So that was the first bit. This is a lot shorter. And it's really about the drive for automation and why I think it's important now. We still trade. I've been in this business since 1991, and we still trade out of home exactly the same way. The only difference is we used to fax the schedules, and now we email them. But apart from that, it's pretty much the same. It's quite bizarre, where everything else is traded online, airlines, commodities, but we still have something quite manual. So I think, first of all, automation is good because it makes us efficient. But I think for digital in particular, we cannot continue the way we're going without automation. And I found this online. It's a bit of Forrester research. Most of you will recognize it. It's normal world, what happens in digital media buying. So you've got your client, got your agency, you could have a specialist here. They're thinking about an audience. They've got the research, they're planning. And then they look at their options, Online, are you going to go guaranteed or RTB? Are you going to go mobile? Are you going to go video? Going to social? And, my view is we need digital out of home there. Unless it's part of that purchase consideration, I don't think we got a hope in hell. I asked one of the specialists to just send me their process map, and this is real. This is real. This is not a joke. Yeah, this is. It's a few years old, but this is what it's like to buy out of home or digital out of home. It's because we're not automated. And I know a lot of us are on that journey, but I think we've got to get there as fast as we can. So again, in your view, is it desirable? I can't see why it's not. And do you believe that buying through an online platform will increase revenue? Yes. I think we have to continue to sell. That goes without saying. We just can't just create some dashboards and think the money's going to come in. But I think it's definitely going to make it easier. And these were some of the quotes. Assuming it shortens the process, it delivers speed and efficiency. I think again we've got to get trading, audience trading within that. I think without any kind of any tools around automation, I think it's a bit of a blunt. It's blunt. I love this one. The process for receiving short-term availability in deals is convoluted. Yeah. Hinders the sector's strike rate. Automation will be a big step. But just reminding us, relationships always built face-to-face. Just don't rely on automation to grow the business. And that's it. So this is what the key kind of respondents, the key messages were from the respondents. Automation's welcome, but we need to continue to educate clients, agencies, creatives on how best to use the medium. I think effectiveness, we've got lots of case studies. Probably we need to kind of, I think a good suggestion from Tim about getting these out there, sharing them a bit more. I think, again, move away from price to value. I think, we all know what the role is. I don't think immediacy has cut through. I don't think people believe in agencies. I think some people know that they can if it's a stunt, but if it's a proper campaign, can I actually get a proper campaign up for Friday? Well, I'm not sure people know that. Of course, accountability, whether it's audiences we're trying to reach, whether we're trying to get business results, whether they're trying to get verification, those are all important. And then finally, collaboration. You know, a lot of you know about the difficulties we've had in the sector with Outsmart and, you know, all the issues around that. And, you know, I finally think we're making some progress. You know, Dakota are back in, Experian have stayed in. It's a smaller organization, but I think we're focusing on some key areas, and of course, standardization and automation is one of those. So hopefully we begin to make some progress. And that's it. Thank you.